Ladies and gentlemen, good day and welcome to the Wonderla Holidays Limited Q1 FY23 earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Adidev Chattopadhyay. Thank you and over to you, sir.
Yeah, good evening everyone. On behalf of ICICI Securities, I'd like to welcome everyone today to the Wonderla Holidays Limited Q1 FY23 call. From the management, as always, we have with us Mr. Arun Chittilapilli, the Managing Director, and Mr. Satish Seshadri, the Chief Financial Officer. I would like to congratulate the management for a great quarter, and I would like to hand over the floor to them for their opening remarks. Over to you.
Thank you. Thank you for that introduction. Good afternoon, everyone, and thank you for joining us. This is Arun, the Managing Director of the company. Let me say that the first quarter is like a milestone quarter for us, as we've seen blockbuster results after like almost 2 years of the pandemic. It gives us a lot of confidence that we're going to emerge stronger after the pandemic. This quarter has also proven that our customers and generally people in general are willing to go out and experiment with outdoor activities and fun, and so that's a strong business proposition for us. As a result, we have witnessed the highest ever quarterly revenue, EBITDA, PAT since inception. We have experienced some truly phenomenal footfalls, growing by some 24% compared to FY20, our last normal pre-pandemic quarter. Now we are entering a new dawn of value creation and growth ahead of us. The financial highlights, coming to the financial numbers for this quarter, we registered revenues of 152 crores, clocking in a growth of 26% when compared to the 121 crores.
Hello, sir Arun?
Yeah?
Oh, yes, sir. We lost your audio in between.
Yeah, okay. Yeah. So our revenues have been at 152 crores, clocking a growth of 26% compared to 121 crores in Q1 FY20. Our EBITDA has grown by 30% to 94 crores compared to 72 crores for the same period in FY20. Our margin is at 62%, and PAT for Q1 FY23 stood at 64 crores, growing by 53% compared to 42 crores in Q1 FY20. Operating highlights. Demand for leisure activities has resumed with a vengeance, as you all know. Our customers continue to view Wonderla as a great way to spend a day of leisure, and providing this through their surging footfalls in each sequential quarter. We also have had an outstanding performance from our resort division. We had almost more than 80% occupancy, the highest ever that we've done. We've also seen footfall growth across all the parks. While some portion of these footfalls could be attributed to pent-up demand, a great part has also come from a fundamental demand which continues every year, and supported by compelling events and strategic marketing activation initiatives that we have implemented to drive demand. These measures and our continuous focus on customer centricity has contributed to these numbers. We also focused on special events and plans during all quarters in the last 2 years, and some of these included our DJ events, rhythm nights, summer fiesta, Holi, those kind of things. Secondly, we've also offered special Park Plus offerings, and some of the new rides also we've launched and has attracted leisure seekers. We have implemented a lot of innovative marketing campaigns, mostly digital, to encourage walk-in and group-based footfalls. These initiatives have reached to a large number of customers and built a strong demand for us and with very less marketing costs. Backed by all these efforts, we have collected footfall of roughly about 11.18 lakhs in Q1 compared to 8.99 lakhs in Q1 FY20. These strong numbers, we have crossed all pre-COVID markers for footfalls, and I'm happy to say that we are moving in the right direction. We have two projects, as you may know. I'm pleased to inform that we have signed an MOU with Orissa government for the development of an amusement park in the state capital city of Bhubaneswar. For this development, we have leased 50.6 acres of land for 90 years in the Kumarbasta village within Khordha district of Bhubaneswar. We are planning to develop this project with an investment of less than 125 crores, and this will be done through internal accruals. This should ultimately expand our top line and bottom line. The other project that we have is Chennai, and that has been put on hold for now. I mean, it's not on hold. It's just that we are waiting for the government to revert on our request of waiving LBT tax for our project. We are reasonably sure that this will happen, but we don't know the timeline. So it could happen in this quarter. And so that's pretty much it. Thank you all for your continued support. Look forward to seeing you at our parks, and we'll go out to the question answer session.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of TVK Vivek Kumar from Best Paths Research. Please go ahead, sir.
Thank you. Good evening, Arun. Great to see superb numbers. So first question is, this Chennai thing, if at all we get the permission, how many years will it take and how do you finance? And the second one is, can you repeat these kind of numbers this year, or how much of it is revenge and how much of it is attributable to your marketing and increased whatever sales efforts that you are doing at your end? And I know you can't predict next year, but assuming that no COVID and all these things are out of the way in terms of outdoor thing, are we sure that we can grow these numbers even by small amounts in terms of footfalls with our marketing efforts? So thank you.
Yeah, I think we can grow this business quite a bit. Like I've always said that we expect at least 1 million per park per year, and so we've not reached that number yet. Yeah, so I think there is definitely headroom for all of our parks to grow. If you see our footfall numbers, the growth, Cochin and Hyderabad have shown almost 38 or 39% growth in footfalls, whereas Bangalore has shown, I think, 12% or 15%. I'm not sure of the exact number, but this shows that we've still not reached that 1 million mark per park. So I think there's definitely a lot of headroom. Chennai project, if we get all the approvals done, I think we should be able to start next year, and we will do most of the work with our internal accruals, and we might take some debt down.
And sorry to ask the same question. You're confident that your marketing efforts, is there anything else that you're thinking in terms of what you can do to increase your footfalls? Because that was a problem for the last decade if you saw our parks, across our parks.
No, I think our parks are running full pretty much the first quarter. I don't think we could have had more footfalls than this. It's very, we were running pretty much full throughout, especially May. We were completely sold out. Maybe in June we can have a little more footfalls in the following year. So I think growing on top of this footfall for next year, I don't know how much we can grow, but we'll see. we will have to look at maybe price hikes, which already planning to do. And but I think for our existing parks, I think we are in a very good place.
Okay, thanks, and all the best, sir.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Aditya Shah from Vikram Advisory Services. Go ahead, sir.
Congratulations, Arun, on the good set of numbers. My questions are regarding 2-3 things, which is what is the expected free cash flow that we plan to generate for this year or probably coming 2-3 years? And second is regarding, let's say, if we are not taking any debt for the Chennai project or, not raising any capital for the Chennai project or the Odisha project, do we have any plans for raising any capital in the next 2-3 years? Because, our outlay would be around 400 crores. That's what I think. And the third point is that, the last ROE of 15% we touched probably in 2015 or 16. Do you think that going forward we would be able to, maintain an ROE between 15 and 18% in the future, or once it touches 15-18 and then we go down again because of the capex and then we go up again, or when do you think?
We don't look at ROE in that sense because this is a very high capex heavy investment. So we don't have a benchmark number like this. But I think we are happy with anything more than 12%, and I think Satish can give more this thing on the numbers.
I will take one by one, sir. First one is on the cash generation. See, in a year we generate about 100 crores cash, on the surplus on the EBITDA side, and for the investments in Kochi, for the investments in Bhubaneswar and Chennai Park, we will be requiring a total investment of 125 crores for Odisha and about 220 crores for Chennai, if we have to go ahead with the...
And over a 2.5 year period also.
Over a 2 years period. So in that 2 years, we will generate about 200 crores, and we have a cash surplus now in form of investment and cash about 200 crores. So we will try to do as much possible with internal accruals on the investment front. This is number 2. Number 3 is, see, the ROI is actually going to be difficult for you to gauge because why that shift happened because the Hyderabad park came into act.
Yes.
So now if the Chennai and Odisha park is going to come, again the ROI is going to reduce because first 3-4 years, it takes at least 4 years to pick up the business. So this is where it is number one. Number 2, we are also having, when we did the Ind-AS migration, we also have a land revaluation of about 400 crores, 385 crores. We had a revaluation. So this will hit on the return. So my return is going to keep on while we are going to add parks, the returns are going to fluctuate.
So broadly speaking, then what is our intention of adding parks on a annual or a biannual basis? Because just to have an idea, currently we have 2 in plan. That's what we know. But considering the capital outlay being around 300 crores per park going forward, if at all we plan any new one, let's say if we don't have a government lease as in Odisha, it's all. My question is just regarding this because it's not clear that what is the ROE that we would want to make on a continuous basis, because as investors that is something that anybody would be looking at very closely.
See, we are in.
It will be hard for us to predict an ROE number. All we can.
But
say
what is your expectation, as in what you want to do it? As you said, 12% and above. That's what you said.
Yeah, I think something along those lines is what we hope to do. But anything more than that, we obviously think it's a bonus.
ROE is again, it's not a static number, With the business, we talk about the business. We see the potential in business is there. When you go by the potential in business, when the top line goes, automatically your ROE is going to go up. Let's see the potential rather than, that's why we are going for a capex and new parks. See, we have to grow our top line in 2 aspects. One is leveraging or sweating the assets of the existing park, number one. Number two is where, as Arun has said correctly, we will try to achieve 1 million footfall, which we were doing before. So with 3 parks, we will try to record 30 lakhs footfall. Okay, that is point number one on the existing asset. With the new asset coming in, my top line is going to grow. So the first approach will be how you will reinvest and improve the top line. Okay. So then automatically ROI, ROE, or EBITDA is only a consequent of what you're going to do. It is not a rigid factor. So we are seeing a potential in this business, and we see there is abundant opportunity in the north of India. So we will be slowly moving into newer parks, and that's the one way of improving your top line.
So definitely there's ample opportunity. There's absolutely no doubt. You're in a great business.
When you're in an expansion stage, you don't talk much on the ROE now. Yeah, it is only a consequent approach.
All right. Okay. Got it. Thank you. I'll come back again if I have more.
Thank you, sir. We take the next question from the line of Gaurav Gandhi from Glory Tail Capital Management. Please go ahead.
Hi, sir. Congratulations on the excellent set of numbers. My first question is, sir, do you allow any movie shooting or marriages to happen in the park, or do you have any kind of facility or planning to develop any?
Yeah, we do. We have a lot of movies which are shot in our parks and weddings, especially in our resort, not in the park as such, but weddings are usually happen in the resort. It's not a very big market for us, the wedding market, but we do get a lot of, especially nowadays, people want, dramatic scenery for photos and media. So because of that, we do get a lot.
No, all right. That's it from my side. Thank you.
Thank you, sir. We take the next question from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, am I audible?
Yeah.
Yeah, so first of all, congratulations on a great set of numbers.
Thank you.
I just wanted to know, so what is our long-term, maybe 2-3 years plan? Like this number of 150 crores nearly is, as you said, we want more footfalls, so that, so over the period of time, how much would this be sustainable, or what would be our year-end target, or maybe FY25 target? Could that be elaborated a bit? Could you have some guidance on that front?
It's hard to give guidance because we will have new parks by FY25, at least one new park, maybe even 2. But based on that, I think we'll have to look at numbers, and Satish may be able to share something like a rough calculation with you.
Yeah.
But I don't think
our short-term objective, as Arun had already suggested, it has to be broken into 2 parts. One is the existing park, which is Bangalore, Hyderabad, and Kochi, where we will try to achieve 1 million of footfall. Okay, now we are at around 25 lakhs, that is 2.5 million. Our aim is to go to 3 million footfall with these 3 parks at a minimum level. Okay, this is number one. Number 2, expansions. When the expansion happen in Chennai and Orissa, it will add up. For the first few years, it could add up 1 million more of a footfall. So we are talking about 3 to 4 million footfall in 2025.
Okay, sir. And I'm assuming, sir, with our increased capacities, you'd also be planning to raise prices. So next year in Q1, we should be better by this number.
Yeah, prices will go up, yes, for sure. See, we have pricing this year. We have not gone. It's gone up only about 2-3% compared to FY20. There is headroom for us to grow pricing, so which we will be doing.
Normally, the top line increases on account of both volume and price. I think we agree with that. And now our focus, coming off 2 years of COVID, our immediate focus was how to improve the footfall and improve the demand. We were focusing on that. Now that we have achieved the first step, we will be looking at the pricing. Pricing we have been doing judiciously. If you have seen the pricing for last 1 year and 1.5 years, if you have followed our pricing, we have slowly improved the pricing and brought it just above the pre-COVID level. Okay. Now we have to work on the inflation part of it. Yeah.
Okay. I get that. And can I ask one more question, sir?
Yeah, sure.
So could you just explain a bit briefly how does our project economics work? Like it takes around 2 years to build and then 3 to 4 years to break even payback period. Could just be some kind of small guide explanation on how does a project work?
Yeah, our new project is, sorry, you can continue.
I will tell, sir. I will answer this. See, let's take an example of Hyderabad Park. Okay, in the second year of operations, we have registered EBITDA positive. Okay, our immediate focus will be how we can achieve EBITDA positive in the immediate years, that is second year or so, and then take up the revenue at the top, at the higher levels. Okay, that's how we work on. So if you see number one, number two, we have to be appreciative of the fact that if I have to do a park now and do 5 years down the line, it's going to cost me at least 2 or 3 times the cost. Okay, we are missing out that. Okay, so if I had developed a park in Hyderabad at around 250 crores, the same park for me to develop is now 350, 400 crores. So I think there is an inherent project cost which is going to go up that we have to. So the ideally the growth has to be from the existing park and the newer projects which we are going to develop. And the unit economics is get the EBITDA positive in the second year.
Okay. Thank you so much, sir. That answers all my questions. Thank you so much. And all the best, sir.
Thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone phone. We take the next question from the line of Mr. Ron Sen, individual investor. Please go ahead, sir.
Thank you for the opportunity. Arun, congratulations. Great set of numbers.
I'm sorry to interrupt, sir. I'm sorry to interrupt. One moment. Yes, please go ahead.
Thank you. Arun, so are we looking at
I'm sorry to interrupt, sir. I'm sorry, there's some disturbance. Allow me.
Why is there a disturbance?
1 second.
Yeah, it's clear, I guess. Can we go ahead?
Hello, Mr. Sen?
Yes. Shall I go ahead?
Yeah.
Okay. Thank you. So, Arun, are we looking at being an operator of some of the ailing parts of India? Is that a model you'd like to explore, given your expertise of operations and having an in-house team? So some kind of a revenue share model or an asset-light strategy in future?
Yeah, we are exploring that. Yeah, we've not, it's something that we are definitely exploring. We've had requests from other parks to do this, but we haven't found the right fit yet. Whenever we find it, we will definitely look at that also.
Okay. And my second question was, any other vectors of growth that Wonderla is exploring? I understand during COVID, I think you did try a bit on the food delivery or something on the food space, but I think that was rolled back. But anything in the online gaming space or maybe increasing the resort offering, given the 3 largest parks that you have enough space left over there. So any thoughts over there?
Yeah, so this year we're going to do some experiments on our resort project, and we're going to expand our existing resort in Bangalore in a few different directions. In terms of adding more things to do for people, adding more thrill and adventure element to the whole resort, and probably retheming and redoing some of our F&B. So those kind of things we are going to do this year. And based on how that does and how it improves our occupancy and revenues of the resort in Bangalore, then we'll take a call on doing a similar or maybe a larger one in Hyderabad, and we can do a similar one in Cochin. We can do one in Chennai. We can do one in Bhubaneswar. So that obviously is something that we can also look at. Yeah.
All right. Thank you.
So the resort we are looking at, that's one vector. Then we are definitely looking at digital and online, offerings for like how can we make Wonderla relevant in the digital space in terms of whether it's gaming or virtual reality and augmented reality, which are, something that we've already worked on in some fashion in our park, right? But we are all obviously looking out to see how else we can use it and how it can augment our revenues.
Okay. Thank you for that. Just one last question. Any update on the Goa state project?
So this year we have not really looked at other. We're just concentrating on Chennai and Orissa, but we are also talking to a few other state governments. We are definitely we want to build a pipeline of projects that we can slowly go out and execute. So we are always we are definitely talking to Goa. We are talking to Gujarat. We are talking to a bunch of different states, and whenever there is some announcement, we'll definitely keep you posted.
Thank you so much for answering these questions, and wishing you all the best for the coming quarters.
Thank you.
Thank you, sir. We take the next question from the line of Mr. Rahul Jaju from R Consultant. Please go ahead, sir.
Congratulations, sir, for good set of numbers. My first question is, when you say Chennai and Odisha park coming in, how much revenue you are expecting from these parks? And follow-up question to this, what do you think about the spike in demand? Is this a pent-up demand or we expect similar growth in future?
The park in Orissa, we are doing a light version. So, we are going to spend about between 100 and 120 crores there. And our ticket price also will be probably about 60% of what we charge in our larger park. So maybe about 600, 700 rupees. So that's the way that pricing will work. And if we get roughly about 500,000 visitors in our first year, so you can do the math on what is the revenue potential. And then that will keep growing, and we should get to again about maybe 800,000, 8 lakhs to about 10 lakhs visitors there also. 8 lakhs is what I think is more realistic in a place like Bhubaneswar. So that is what we are gunning for. But these are rough calculations. Chennai will be a bigger park like our existing parks in Bangalore, and so you can do the math from there. What else? That was it, right? That was your question, right?
Yes. And so my second question is, like, as we all can see, inflation is coming in, everyone is comparing things with inflation. So do you feel like it's going to impact our business also?
Not really. We've actually, if you think about it, we've actually increased the price of our F&B and tickets quite a bit in this year itself. We're going to take further price increases, and because we don't have a direct comparable for our offering, and I think pricing has always been one of our strong points. We can increase our prices and not worry about declining footfall. So we are definitely looking at further price hikes.
Okay, thank you. And so my very last question, what is our current overall capacity utilization in different parks, and what is our current capacity utilization?
It's hard to predict that right now because our theoretical capacity and what we can actually keep is, but theoretically we can have 10,000 visitors per day per park. But we are probably at about 5,000 or 6,000. What is our Q1 average, Satish?
Sir, in a year we do about 25
Not Q1. No. I'm saying this Q1. What will be the average?
The Q1 average will be more than about 4,000 rupees. 4,000.
Yeah. So we can still add more people if we want.
Okay. Got it, sir. Thank you so much.
4,000, yeah.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their phone at this time. We take the next question from the line of Mr. TVK Vivek Kumar from Best Par Research. Please go ahead, sir.
Arun, this is during the COVID, you've just mentioned that we are working on how to create a brand awareness even when visitors outside in their life, like not when they're not in the park. So are we thinking anything to do in those terms? Like you said that we want to be relevant try to be relevant more times than when they're just inside the park. We are trying something on that line. Either you said or this I don't exactly remember who said it, but during the COVID, you mentioned that you are thinking very deeply on these things. So anything on that?
We did that. No, that is actually we did that, and we've been very successful in that. That's why we got this kind of footfalls, right? I think the way we do our marketing is completely different now. I can't give you too much detail. All I can tell you is that we do mostly digital marketing, and we do very precise targeting of people who are even thinking about going out somewhere, and we are able to target them very accurately and give ads and offers. So that's how our marketing is working now. So that definitely, so if people are thinking about an outing, we should be in their consideration. So we do a lot of things for that. Yes.
Okay. Thank you, and all the best, sir.
Thank you. We take the next question from the line of Meet Jagnani from PS Associates. Please go ahead. Mr. Meet, your line is in talk mode, sir. You may please go ahead.
Hi, Arun. Thanks for the opportunity and congratulations for very good set of number. So my first question is, if this Chennai project does not materialize in say 1 or 2 quarters, so are we looking at any other second option, or we will go ahead only with Odisha for next 2 years?
We are definitely looking at other options also. Like I mentioned, we are always looking out for new projects. So if Chennai doesn't work out, we look at something else. I think there are always at least 2-3 projects in our pipeline. We want to keep it like that, and we are trying to grow that pipeline now. I think there are a lot more opportunities, and a lot of states are looking at investment in the tourism sector. So we are talking to a lot of state governments to see whether we can tie up and do a new project. So that helps us reduce our capex also.
Okay. And the second question is regarding price hike. Are we looking at price hike across all the parks, or is it at any given one park?
Can't tell you. I mean, but definitely we are looking at price hikes across the board at some point in the second half of this year. Maybe not this quarter, but next quarter definitely we look at more price hikes.
Okay. Thank you very much. Again, congratulations on nice set of numbers.
Thank you.
Thank you, sir. We take the next question from the line of Abhishri Shah, individual investor. Please go ahead.
Hello. Hello, am I audible?
Yes.
Yeah. Hello. Good evening, sir, and congratulations on the good set of numbers. So I have a couple of questions. Can you put some light on the park-wise performance? And I see you are frequently adding rides in the park. So what is your plan ahead on that?
We always keep adding rides to the park. That's something that we've been doing for a very long time. Every year we roughly spend about 10% of our top line on adding attractions to our our park. So that is definitely one thing. Then if you look at our footfalls, I think highest growth in footfall happened in this quarter for Hyderabad. So I think almost 36% growth in footfall, and I think 34% growth in Cochin. And what is the percentage growth in Bangalore? 7, no?
Sir, I will tell, sir. So Hyderabad, we got 39% growth in footfall.
39.
Yes, 46% growth in revenue. And in Kochi, we got 38% growth in footfall and 34% growth in revenue. And in Bangalore, it was 7% growth in footfall and 12% growth in revenue. So all the three.
Bangalore is already running. Yeah, Bangalore is already running almost to very full, even before COVID. But there is a lot of headroom for us to grow in the other 2 parks, and that has happened. That's what we are seeing.
Okay. And so how frequently you keep adding, as in on quarterly, monthly basis, or yearly?
Every year we'll add something. Yeah.
Okay. And one more. In last quarter, you had mentioned a satellite model for the new park. So how much pricing we will be keeping for that park?
It will be about 60% of our full size park pricing.
Okay. Okay. And thank you. That's it from my side. Thank you, sir.
Thank you. We take the next question from the line of Mr. Anil Jain from Equipassion Capital. Please go ahead.
Thanks for the opportunity and congratulations for a great set of numbers. I wanted to know, please throw some light on the reality of our business.
Sorry, I can't hear you properly.
Yeah, I just wanted to know seasonality in our business in terms of divided into quarter 1, 2, 3, 4, in terms of footfall and revenue.
So quarter 1 and 3 are stronger quarters. Quarter 2 and 4 tend to be slightly weaker. But that's changing now with our digital marketing, I think. But of course, quarter 2 will be weaker because of the rains and opening of schools and colleges. That has an impact on footfall. So roughly that's how it works.
Roughly, can you give some out of 100? Suppose 100 days of footfall in a year. First quarter, can it be allocated into 1, 2, 3, and 4 quarters? Ratio from your
I'm sorry to interrupt, sir. We are losing your audio.
We can't hear you.
Hello?
Mr. Anil, could you be a little louder, please?
Yeah, it's audible now?
Yeah, it's better. Please go.
Suppose there is footfall of 100 numbers in a year. Can you, from your past experience, how much is in quarter 1, quarter 2, quarter 3, and quarter 4? Just approximate.
Satish?
Sir, yes. The quarter 1 is the main quarter for us, and we record about 40% of our revenue during quarter 1. Okay, which is about 10 lakhs footfall is what 9 to 10 lakhs footfall we achieved during quarter 1, and this year we have achieved little more than that. And quarter 2 and quarter 4 together is about another 30%, and quarter 3 is about 30%.
Quarter 3 is 30.
Because the season. Quarter 3, if you take, it's again a season. So Q1 and Q3 will be good numbers, and Q2 and Q4 will be slightly moderated.
Okay. Means 2 quarters combined, first and third, approximately 70%.
Yeah, roughly about 65-70%, yes.
Okay, got it.
Thank you.
And in your Cochin park, your footfall is higher than pre-COVID level, but your revenue has not increased in sync with that. What's the reason?
Can't hear you.
Hello. In your in Cochin plant park. Hello. Is it audible now?
Not very clear.
Hello now. Hello.
Sir, are you connected from your head?
Hello. Is it audible now?
No, we can't hear you properly.
So I would request you to switch to your handset, sir.
Hello. Is it audible now?
Yeah, it's better. Please go ahead.
Yeah. In your Cochin park, from pre-COVID level, has increased 38%, but your revenue has increased by 34%. Can you throw some light on that?
Sir,
some group footfalls. Yeah, there's some group footfalls in that. That's right.
Yes. See, the revenue, the ARPU is a factor of the job mix between retail and group footfall. If you take the Kochi park per se, we had the back at 19:81 in Q1 FY20, and now the footfall was 47 and about 50-50 in group and walk-in. So that has reduced the revenue to an extent.
Okay, got it. Thank you very much. Yeah.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone phone. We take the next question from the line of Sagar Shah from Sunshine Capital. Please go ahead, sir.
Sir, can you share the details of tickets to non-tickets ARPU?
Yeah. If you take ARPU, it has 2 components, which is ATP, which is average ticket price, is at 987, and SPH, which is a combination of F&B and retail, is about 313. Both put together, we have recorded 1,300.
Okay. And sir, you earlier mentioned like you have switched from traditional to digital marketing. So can you share like how much marketing expenditure we have every quarter against the revenue?
Our percentage of revenue to market expense is about 8% normally. 8 to 9% is our ratio.
Okay. And so last is like how soon we can see the Chennai park coming in and the taxation matter that can be resolved like?
Hopefully within the next 1 quarter.
Okay, sir. Thank you.
Thank you very much. We take the next question from the line of Gaurav Gandhi from Glory Tail Capital Management. Please go ahead, sir.
Arun sir, can you share me your understanding regarding how many times the same person visits the park? If he visits once, then whether he comes back or what is the time period?
Usually we get a maximum of two visits per year is usually what we get. There are heavy users who come 10, 15 times a year, but that's a very small number. Most of the people maybe once or twice a year.
Okay. All right. Yes. Thank you.
Thank you very much. We take the next question from the line of Mr. Sachin from Swan Investments. Please go ahead, sir.
Yeah, hello sir. Good afternoon and congrats for a very good set of numbers. 2, 3 questions. One, in your presentation mentions that you have a lot of surplus land in the existing park itself. So are we looking at adding any more capacity or any more rides at the existing parks, and what type of capex we are looking there?
Yeah, we are constantly going to add newer attractions. So we are planning some attractions to be added in Hyderabad. Right now that is our smallest park and newest park, so but needs some addition of rides because now we are getting huge crowds there also. So some expansion will be happening, some F&B expansion will be happening. Bangalore is going to see some expansion, so will Cochin. So all 3 parks this year we will see a lot of expansion and refurbishment.
Will it be minor capex or like 15-20 crores, sir, all 3 put together?
Yeah, it will be in that range only. We're not going to spend too much. Yeah.
Sure. Secondly, I think currently your ratio of ticket to non-ticket is like 75-25 ballpark. So what is the ratio like globally, and is there a scope to improve this ratio substantially in favor of non-ticket?
Yeah, so of course, the global ratio is 60-40 and we are at 75-25, so we should be able to get there soon. So that is part of the expansion that we are doing in our F&B also. We want to change our F&B offerings to more value-added offerings. Again, aided by our digital transformation, so we understand what kind of people are buying what kind of food. So that intelligence, we need to do some work on that. Hopefully within the next year, that system will also be up and we should be able to, at least give more varied offerings in F&B and merchandise. And so a lot of expansion is happening in that area. Yes.
But do you think over the medium to long term we can also aspire to get the global benchmark, or because of the demographics?
Those are developed country metrics we will not be able to achieve. I think the sign of a developed country when you have people spending as much as on food as they are spending on tickets. That happens, I think, in Western. Maybe in India it will take some more time, but I think eventually, yes, we will also get there.
So over
not in the short term.
But over a 3 to 5 years?
3 to 5 years, we would want to increase it to like say 70-30. But 60-40, I think it'll take probably a little more time.
Sure. And you also mentioned that, typically at good times, each of the parks can do a million visitors every year. But you also mentioned that the capacity is much larger, like 10,000, and we know there are seasonal variations. But in general, what do you think we need to do so that, we can improve from this a million a year over a 2-3 year to say like 1.4, 1.5 million per park?
So I think, that means we'll have to utilize our capacity much more smartly, like how airlines do that, right? They will oversell some capacity or they will do some dynamic pricing. There's a lot of tech element that will come in if you want to do that and to improve your capacity. So we are also planning to do things like that so that we are more efficient with our ticketing.
Yeah, so we can call it as revenue management or yield management. So do we have we are investing significantly in terms of some software, or are we boosting the digital marketing?
Yeah, we will.
Can you give us some more insights what we are trying to do on that front?
we are developing our own software for that. Our ticketing software that will be completely bespoke because nobody else has that kind of software, so we have to develop it pretty much in-house. But of course, it will have elements of CRM and Salesforce automation, those kind of things. So we are building that entire stack, but it will take us about a year to finish it. And hopefully, we can also look at dynamic pricing for our ticketing also once that is up.
Sure. And just one last question, sir. We heard that in Goa there's a new international airport coming in, and the government wants to develop that more as an entertainment hub. So are we looking at any options near the new international airport in Goa in terms of opening a new park or exploring any opportunity there?
We are talking to the Goa government. We might be doing something there. Right now, it's just in discussion.
Sure. Thank you.
Thank you, sir. We take the next question from the line of Mr. Anuj Sharma from M3 Investments. Please go ahead.
Yeah. Thank you for this opportunity. Arun, you did say that the Chennai outcome should be out within the quarter or so. So the probability of us getting it or not, it's a 0 or 1 scenario, or there could be a scenario wherein lower LBT is considered and we'll be fine with it.
I think it should get done. Most likely, I would say with a 80% confidence that it should get done, but then we don't know. Nothing is certain, 100%. So that's the way we are looking at it. We are reasonably sure that it will go through.
Okay. At the terms which we have always intended for, correct?
Yes.
All right. And this is based on your assessment as to how things are moving in the bureaucracy, correct?
Yeah.
All right. Thank you so much.
Thanks.
Thank you, sir. We take the next follow-up question from the line of Mr. Meet Jadnani, PS Associates. Please go ahead.
Yeah, Arun, just wanted to get an idea on your expense side. So, could we maintain the current run rate of expenses, or could we see any increase in expense, deducting depreciation, which will increase with new capex?
See, when we do new capex, obviously expenditure will be different. But on a steady state, I think for our existing parks, our expenditure, I think, should be under control.
Okay.
Thank you, sir. We take the next question from the line of Neha Sharma from Pearl Global Investments. Please go ahead.
Hello. Good evening, sir. And congratulations on the good set of numbers. I just have one question. Can you give some guidance on the footfall and the revenues for the coming quarters, if possible?
I don't think we can give revenues. I think all we can say is we should do better than FY20. Leave it at that. And I think, but of course, we'll probably do a little better than that also. I think we are definitely hoping to beat FY20 numbers by a considerable margin this year. That's what we're hoping to do.
Okay, that's it. Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for the day. I now hand the conference over to the management for closing comments. Thank you, and over to you.
Thank you all for attending our earnings call for the first quarter. Looking forward to more exciting news and updates from Wonderla Holidays. Thank you all for joining. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.